let's move on. Let's take it at home here. Well, Proshare, Nigeria's leading financial news data analytics organization, has just released a new report that highlights the position of the top 6 Nigerian banks and their position in the sector and the overall economy. The new report was released just 2 months into the 2-year recapitalization program of the banking sector, announced earlier in the year by the central bank. Now, digging into the report for me is Tosin. He's Proshare's Chief Economist of Impact Research. Great having you in the studio tonight.
Thank you, sir.
Thank you very much. How's the week been?
Very well.
You guys had a great event 2 days ago. Let me just put that there. Congratulations.
Thank you.
You folks, in terms of your financial news, credibility is important. In particular, when you do ranking for big banking sector in Nigeria, everybody in the room on market trade will depend on your report. So that's very important for me, credibility. But what is the key thrust of the latest Tier-1 bank report? Okay. Talk to me.
Thank you very much for having me once again. And one thing we have found out is actually that there is an industry classification of Tier-1 banks before we delve into that particular issue. But we find out that the traditional classification of the Tier-1 banks more like tend to fix those who are Tier-1 bank, and as such, banks that improve in terms of their efficiency and effectiveness may not have that opportunity to actually be called Tier-1. And our previous edition has actually proved that to be true, where we saw that from the extant figures, we actually saw some drop off that ranking in our previous ranking, and then but after that report, we saw that some banks improved their capacity in those areas that we actually identify as they being lacking, and as such, they are able to improve. So that's one of those things that bets the Proshare PSB, because we are looking at a more dynamic that represents the efficiency and effectiveness of bank, and also the evolution of banks, such that if a bank improves in their effectiveness and their efficiency, they are able to meet that target of Tier-1 bank. And
is Tier-1 bank just about whether you are 1 trillion, 2 trillion in naira terms? What exactly is the core methodology here? Okay,
so that's the traditional one based it on those absolute value. But then we revised that, and we came up with 7 broad metrics for classification of banks, and of course
of Tier-1.
Of Tier-1, yes. This starts from the capitalization. We have capitalization, we have assets, so that we don't also, exclude assets while it's a very important metrics. We use risks, we use profitability, we use digital income, we use efficiency, and then we use governance. All of this is as I said, is dynamic because we are trying to also capture the evolution of bank, what is important at each particular period.
For example, technology.
Exactly.
It's now a game changer.
Because you remember that our previous edition, we've said banks are going in extinct, but banking is what we are seeing. The brick and mortar form of banking is going out, but we are looking at banking. So that's why the digital banking is a key aspect of our metrics, which we continue. And of course, this year too, we have the capitalization coming as one of the major metrics in that ranking.
Interesting when you see the central bank use what you call systemically important bank status. How does that rank with what you do at Proshare in terms of this report?
Okay, so
what was the difference?
So the systemically important bank of the central bank at the base level uses more like the industry classification that we talked about, because it's based on total assets, the proportion of each bank's total asset to the industry assets, same with deposits, same with credit. But we are looking at a more dynamic model. So rather than going that route of just creating a breakout point to say you are Tier-1 or Tier-2 based on the proportion of industry, we actually use an econometric model to create the weights that are attached to this matrix. And with that model, we are able to attach the weights to the matrix and then sum it up to create a score. So if you score below the average, you're Tier-2, and if you score above the average, you're Tier-1.
So you talk about recapitalization program. So we've got 2 years, and you just released this report into 2 months into the 2-year program that the Cardoso's administration announced. So how does this report play into the current program?
Okay, so thank you very much for that again. As I said, the model is dynamic. And so the theme of this year's ranking is actually centered around the recapitalization effort. And then beside the discussions that we brought up in the report, talking about the bank's capitalization to the economy, where we looked at overcapitalization or undercapitalization, because one of the things we brought out was the fact that overcapitalization is as dangerous as undercapitalization. So we look into the intricacies of that. But again,
too much money, that's overcapitalization.
Overcapitalization, which could, of course, fuel excess liquidity in the system. And we've seen that actually play out in past recapitalization. Don't forget, in the 2005 recapitalization, some banks were able to meet that recapitalization, but 6 years down the line, they had liquidity and solvency challenges. The likes of
some of them are no longer in existence today.
Exactly.
Because there was so much money.
Oceanic Bank,
Intercontinental.
Yes, what became of them? So that's one of the reasons why we are looking at that. But aside that, we also place capitalization as part of the metrics. 3 out of the 14 metrics that we use. And for that, we use the share capital, we use share premium, another capital issue, we capture it with the capital adequacy ratio. You recall that, again, that the CBN in its wisdom had said that the retained earning of most of these banks are encumbered. So we kind of exclude that because we are looking at the high quality capital
that the banks will have.
That the bank will have, yes.
Not just every kind of money in the basket.
Exactly.
Interesting. So I have a copy of those reports, and what do I do with it as an investor, as a market trader, in terms of positioning in the banking sector? Do you think this is a document that government should also, officials, relevant organizations should pay attention to?
Okay, so one of those things that drove us into this recapitalization Tier 1 was because we found out that actually the investors tend to consider the Tier 1 more in terms of investment because of their capacity and strength.
Well, institutional investors do.
Institutional investors, even in local high net worth individual that wants to do business, we've seen that play out in the Dangote refinery. You know, so because of this, we found out that investors actually looked at the capacity of this Tier 1 tend to de-risk their portfolio. And because of that, the risking of the portfolio, and of course, as I said, their capacity to finance the kind of the scale projects that they are looking at, they tend to favor this type of bank above others. But again, because of the focus and the capacity of this Tier 1 bank, it also gives them prospects that we have seen the effect in the market, in the equity market, where investors tend to favor others bank. But again, it's not so much to say that we're discrediting the lower tiers, because one of those things, we have been tracking a number of the Tier 2 bank. In fact, we see some of them actually joining the rank in our previous rank, and although some of them dropped again. But one of those things we tell ourselves is that what if you buy into a Tier 2 bank at this period where they are Tier 2? And the trajectory with which we saw some of this bank going, in fact, we start seeing some of them using our metrics to gauge how they can actually measure up into the Tier 1. So imagine buying a bank at Tier 2, and of course, in the next few years, or maybe in the next ranking, they are Tier 1. So the appreciation and...
Because the recapitalization is a 2-year program.
It's a 2-year, exactly.
So you could just end, before the end of the capitalization, could as well move to Tier 1.
Tier 1,
exactly. That means I'll be in the money.
Everybody will be in the money.
If I do that, I'm going to be in the money.
Yes.
That's what it means.
Yes.
So this is a report that everyone should take a very particular attention to.
Yes, sir. Yes.
That's very good. Okay, we'll talk more about this. We're seeing a number of these companies now, these banks, coming to the market. And I think next week we're going to hear a little bit more from Jitco, for example, Access Bank, for example, coming to the market, talking about facts behind the offer. And I'm sure you and your team will be listening to hear, have more details as to look at your reports and look at what they're talking about in their offer papers, documents, and then see where we take that forward.
Yes, we are actually coming up with another report that actually looked at the recapitalization.
Do you guys do anything else at Proshare rather than write reports?
That's what we do.
That's what you do for a living.
Yes,
thank you. Thank you for the good job. Thank you, and we wish you all the best. Thank you so much for those perspectives at Proshare. All the best. Have a great evening. Let's Tosin, the Chief Economist at Proshare.